Good day, everyone. Wherever you're watching from, um, welcome to my channel. Please, if you're new, kindly try to support us by hitting the subscribe button and the likes too, and as well share as much as you can. So today we are going to talk about the power of 3 SMC, which is the AMD pattern. The AMD pattern where the A means accumulation, the M here means manipulation, and the D means distribution. So this is a very crucial pattern or structure to always look out for if you're someone who trades SMC, or even if you're new or you want to start trading SMC. So these are very crucial structures that you can be able to look out for to scale up your games in trading, or trading forex, or any given pair, or let me say commodity, derivative, forex, or oil, and the rest of them. So without wasting much of your time, so I'll have to give a structure of how these patterns looks. So yeah, let me give a structure of how this pattern looks and how you can go about trading them in for it to favor you, because one thing is to know the patterns, another thing is to know how to trade them. Many can know the pattern, but they don't know how to trade them in a very good way for it to favor them. Yeah, so this is the pattern. Let me say the market is coming. Let me see the market is coming from. Okay, let's use an uptrend first. Market is coming from an uptrend like this. And all of a sudden, we start seeing the market accumulating like this, accumulating like this, and the market happens to do this. Then before doing this, now, so this let me say this is structure. Yeah, this is structure. Now from here, you see the market accumulated here. At this particular stage, the market accumulated here. So let's use this, the accumulation. Yeah, if you notice here, the market accumulated there. So for you to trade this structure, this pattern, in your favor, or in a way you can be able to use it to scale up your, or now advance your trading skill. So whenever these patterns occur, most of the times, trading this pattern, you need to be trading it in accordance to the trend for it to favor you a lot. And you don't need, even if you want to counter trend, but as you need to be very vigilant about the things happening around, because these patterns, they always hunt for something. They always go for something before actually going to his actual move. So let me say these patterns occur. For you to trade it very well, you need to look around the nearest order block, or the nearest fair value gap you have around you. So let me say when the market is in an uptrend, and you want to trade patterns like this, I think you should just be patient enough and see if there is an order block beneath the area of your trend, or beneath the area of the protected low. Yeah, if you can see a very good clear unmitigated order block, just know that the market is actually going to come, or that the market is actually going to manipulate towards there to mitigate that um, unmitigated order block. Or if there is a fair value gap there, just know that the market is going to manipulate. Manipulation means it will actually, for those that trade breakout, it will actually do like it wants to break out and start going down or start reversing. Because some people that trade breakout, maybe once they see these patterns and the market broke this neckline, they say, okay, the neckline now is broken, so um let them now buy or sell from here, something like that, and put their stop loss above here, something like this. Let me say those that traded breakouts, um, um, once something like this occur, some of them you see they will now put their use um, their tool. Once the market broke the neckline, they will now say, okay, let them hop in from here and maybe take their profit somewhere here, maybe 2 hour or 3 hour, something like that. But without having this proper knowledge, you see, you be hunt, because most of the times once the market does something like this, it actually, let me say, induce a lot of people. Let me say, yeah, it actually makes people like to hit a lot of SL. Like it's, let me say, just like an stop loss hunt or whatever they call it. So I'm trying to let you know, open your eyes in things like this. Whenever things like this occur, just be vigilant. Just be vigilant to see if there is an order block beneath in accordance to the trend. Let me say the trend is up, and maybe the market is trending up and there is another block beneath it. It has to be in accordance to the trend for it to favor you a lot. So all you have to do is wait for the market to manipulate towards that area the other block on fair value gap is, something like this. And I think yeah, you have to wait for it to manipulate. You have to wait for it to manipulate towards this area before the actual move will start. So this is all about a patience game. So the same thing happens to the downtrending too. So let me just use this invert scale on that one too. Yeah, it's the same thing. Maybe the market is downtrending too, and structures like this or patterns like this started forming itself. You just have to wait for the market to manipulate towards the downside. That is why I say you have, for you to trade patterns like this properly, you have to trade it in accordance with them. Don't try to say you are over smart or whatever, that you can use it to counter a trend. Yeah, maybe some occasions you might be lucky, but in the long run, like you will see that you happen to hit more losses using this pattern in countering a trend than having more wins. But if you're trading it in accordance to the trend, you will see that it will be favoring you more than when you are trying to use it to counter a trend. So anytime patterns like this occurs, just wait for the market to to um to manipulate towards the protected low if the market is in an uptrend. But if it is an and the protected lower, yeah, lower low. But if it's in an uptrend, you have to wait for the market to manipulate to the protected lower high. Yeah. So before you can now take your trade. So I think let's just go to some examples from the chart. So I think I have one here. Um, I have one here. As you can see from here, from the 4 hours view, the 1 hour view, you can see this market is uptrending. for a very long period of time now. GJs, most of you know that I trade JPY pairs a lot. I think they are one of my favorite pairs, so that is why you see me talking more, lecturing more on pairs like this. Although I do trade gold and GU, but JPY pairs are, should I say, my favorite pairs to do. So, um, if as you can see from here, the market is uptrending, creating higher high and higher lows, higher high, higher lows, higher high, higher lows, higher high, higher lows. So now at this area, you saw the market created this higher high, and this is a higher low. Now from here, you will see this structure I was just talking about. From here, you see this structure. From here, you can see that this market started manipulating from here. Immediately this market started moving, started manipulating from here. Yeah, it started manipulating from here. Sorry, this. Okay, let's leave it like this. It started manipulating from here. I'm sorry, accumulating from here. It started accumulating from here. If you can see, market started accumulating from here. So in here now, I'll have to use this text to write accumulation. Of which most people know, can actually call it consolidation, consolidating, accumulation, whatever. What again do they call it? Ranging, yeah, ranging. But this, for the sake of this video, this is accumulation. You see, the market was actually accumulating from here. Let me make it, let's say, red for it to be visible. No, yellow. Okay, yeah, yellow. You can see the market was accumulating in this area, in this area. Now, like I said, in accordance to the trend, for it to favor you, in accordance to the trend, if you notice, when the market was accumulating, you see, it gave a series of accumulation for a very, 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 very long period of time. If you notice, before this market happens to move to the upside, this is a very good single order block that was untapped. You see, this order block here was very untapped. It was not mitigated. That's why I use the word untapped, for you to understand what I mean by mitigation and unmitigated. So mitigation means this other block has been tapped, but when I mean unmitigated, it haven't been touched. Like, let me say, I don't know what I can use for a good reference now, but I think with this layman logic, I think you should understand what I meant by mitigation and unmitigated. So mitigation means it has been tapped by a candlestick. Okay, let me see, for adventure, if the market was, um if the market had done something like this, maybe this candle week here happened to touch this other block, I think you should do, I think for me, I wouldn't have taken the trade, because it happens to be that the other block has been tapped or mitigated. Yeah, tapped means mitigated. It happens to be that the other block has been mitigated. So this okay, let me say, this is another concept of knowing a other block that can fail and other block that cannot fail. But that is not what we are here for. This the purpose of this video is just to educate you on the AMD pattern. So maybe in my next video, I'll be talking about other block series, or other block concepts, how to know an other block that can fail and other block that cannot fail. So let's just talk about this for now. So as you see, the market was accumulating for a long period of time. All of a sudden, there was this long candle week, this long aggressive candle that pulled down immediately. Look at it, pulled down to this other block here. Look at, some can call it an engulfing candle. This is an engulfing candle, but um, from the concept of SMC, we actually know this as an order block. and as you can see, it's a very nice order block that was unmitigated. You see the market came and mitigated it from here with this aggressive impulsive move towards the downside. So you see this aggressive long candle, yeah, towards the downside. So that was why I said in order for you to trade this in order for you to trade this concept or this pattern, for it to favor you, have to trade it in a quantum straight line, because as you can see, for a long period of time, the GJ, which is GBPJPY, has been accumulating. So now something like this started happening. As you saw, immediately that, yeah, it was accumulating. The market now manipulated towards the downside in order to mitigate this other block before now distributing. Now, immediately it manipulated. Manipulation means it broke out from the range and tried to yeah, and try to trick some traders, because there are traders now seeing this aggressive move towards the downside that broke this neckline, this area. They will now have to say jumping for a sell, because if you check from here, they will think that the market is trending down. See, if you check from here, they will think that the market is trending down, but from a long picture of it, you see that the market is actually not trending down. This market is actually aggressively buying, which is in an uptrend. But for those that maybe they didn't happen to check the bigger picture of the market, or have to see what the market is doing, maybe seeing this series of downtrend, this little downtrend, they will not think that, okay, this market have broke this neckline, let's now sell aggressively. No, if you check from the bigger picture, you see that this market is actually trending up. So that was why this market aggressively broke this area, or move out from this area, from this accumulation area, and manipulated towards this downside. It manipulated towards this downside. Look at this candle, this long candle manipulated towards this downside, mitigating this other block here before now distributing to the upside. Now distribution means it started moving to its actual area, or its actual intent to move place it wants to move. Look at, this was the accumulation. This weak candle that came down was the distribution, and this move towards the upside. This weak candle that came here down was the manipulation, and this move towards the upside was the distribution. So yeah, I think there should be one example as well on UJ, which is USD JPY. Let me take um yeah, USD JPY. I'm sorry, the network is, I think, I don't know if I can find that, but it will be long. If I can't find it, I think that example I gave should be a very good example for anyone who wants to be traded. Okay, I've seen it. I've seen it. Like I said, okay, this one came for a fair value gap. Like I said, the market actually hunts for a fair value gap or another block. That's why I said if you want to trade these patterns, you need to trade it in accordance to the trade and to the trend. Look at, you saw from here, UJ has been creating series of higher high, higher lows, higher high, higher lows, higher high, higher lows, higher high, higher lows. And from here, it created a good higher high with this impulsive move towards the downside. And if you notice from here, let me delete this. If you notice from here, the market started accumulating. From here, you see, market started accumulating. You can see, market started accumulating. It started accumulating from here. Sorry, this thing don't want to stay. It started accumulating from here. This was where the market started accumulating from. See, you can see this accumulation, this green. sorry, it's small letter, but it still serves the same purpose. Yeah, you see, the market started accumulating from here. Here, this area, you can call it accumulation, consolidation, or ranging. But like I said, let's use the word accumulation. So once the market started accumulating from here, okay, towards this area too, this area was among. So you saw this candle that pulled down towards this downside. As you saw this candle, what was this candle manipulating for? This candle manipulated for this if you can see, if you know the concept of um SMC, if you trade SMC, you should know that fair value gaps and other blocks are can serve as a point of interest. As you can see, this market came to mitigate this fair value gap here that was unmitigated. See this fair value gap here. Okay, let me use this red. You see this fair value gap here that was unmitigated. Look at fair value gap now. Look at, if you notice, this fair value gap here wasn't tapped. So in order to know a valid fair value gap or a valid order block, it should be unmitigated. A value fair value gap. Okay, for you to see this, let me go to the daily time frame for you to see this fair value gap that it wasn't mitigated. That was why the market manipulated towards there. Look at, you see this fair value gap here, from here to here. It was not mitigated. Now look at, if you want to trade this properly, if you come from the daily time frame, you can see this fair value gap that was unmitigated. So in trading SMC, you need to be watching out for fair value gap and other blocks as your point of interest. As you can see, this fair value gap here wasn't mitigated. That was why this market manipulated towards the downside after a series of accumulation or a consolidation or a ranging. After this series of accumulation here, the market happens to manipulate towards the downside. You see the reason why I said if you want to trade concept like this, you should be trading it according to the trend. And as well, you can see a nice, good, unmitigated order block here too. But the market didn't go for the other block; it actually went for the fair value gap. You can see, if I am to trade this, I would have waited for this other block. For me, I would have waited for this other block in order to be safer. I wouldn't have gone for this fair value gap, but you see, but the market went for the fair value gap, yeah, which is what it is. You can't tell the market what it does. So that was why I say if you want to trade concept like this, you have to trade it in accordance with the trend. So if you're trying to counter trend, easy to counter trend, like you will not be favored or something like that. So that was why I say trade it in accordance with the trend. Like you can see from here, this market has been uptrending. Higher high, higher lows, higher high, higher lows, higher low, higher lows, higher high, higher lows, higher high. Market started manipulating from here. It distributed down and mitigated this fair value gap. So that was why I used a fair value gap and an order block as an example here, so that you can know that maybe whenever the market is manipulating, you should be vigilant enough to observe the area the market is coming from. One, if it's in an uptrend, just be expecting the market to manipulate towards the downside first before distributing towards the upside. So if the market should manipulate to the upside first, if the market is uptrending and the market happens to manipulate toward the upside for first, I don't think there should be any reason for you to start looking for ways to take the trade. Just just ignore the trade. Just ignore the trade here. So it's better you ignore it than taking a loss there. So whenever the market is uptrending and the market happens to manipulate towards the upside first, don't take the trade. But if the market is if the market is uptrending and it happens to manipulate towards the downside first, once it manipulates towards the downside, be vigilant enough to know what it's manipulating to come to take. If it is a fair value gap, if there is a nearest fair value gap there, just be positioning yourself in order to buy with a preferred good confirmation entries. Yeah. So if you can see from here, the market manipulated and came for this fair value gap here before it started distributing towards the upside. So I think with these two examples, yeah, we are good to go. So if you find value in this video, please hit the like button and subscribe. Thank you and have a wonderful day.